the cryptocurrency market, and Bitcoin. A comprehensive overview. The cryptocurrency market, with Bitcoin as its pioneer and most prominent asset, has emerged as a global financial phenomenon over the past decade, capturing the attention of investors, financial institutions, and even lay people. Originating from a revolutionary idea of a decentralized monetary system, free from government or banking control, cryptocurrency has evolved into a complex, diverse ecosystem with a market capitalization of trillions of dollars and the potential to profoundly change how we perceive money and finance. Bitcoin, the digital currency that started a new era. To understand the cryptocurrency market, it's essential to begin with Bitcoin, BTC, created in 2008 by an anonymous individual or group known as Satoshi Nakamoto and launched in early 2009, Bitcoin was the world's first cryptocurrency. Its initial goal was to create a completely decentralized peer-to-peer electronic payment system, eliminating the need for financial intermediaries like banks. The core of Bitcoin lies in blockchain technology, a distributed and immutable ledger. Instead of a central authority recording transactions, a blockchain is a chain of blocks cryptographically linked together. Each block contains a list of verified transactions. When a new block is created, it's added to the chain, forming a public and permanent record of all transactions. The distributed nature of the blockchain means that copies of the ledger are stored on thousands of computers, nodes, worldwide. This ensures transparency, security, and censorship resistance, as there's no single point of failure that can be attacked or altered. The process of creating new Bitcoin is called mining. Miners use computational power to solve complex cryptographic puzzles. The first one to solve a puzzle gets the right to add a new block of transactions to the blockchain and receives a certain amount of Bitcoin as a reward, plus transaction fees. This process not only creates new Bitcoin, but also verifies and secures the network. The total number of Bitcoin that can ever be created is limited to 21 million coins, which creates scarcity and is one of the key factors in Bitcoin's valuation. Halving events, where the mining reward is cut in half, occur approximately every 4 years, further enhancing this scarcity. How Bitcoin works and its key characteristics. Bitcoin operates on a peer-to-peer network, where each user can send and receive Bitcoin directly without going through a bank. Transactions are signed with the sender's private key and broadcast to the network for miners to verify. Once enough confirmations are received, the transaction is considered complete and irreversible. Key characteristics of Bitcoin include decentralized. No central authority controls Bitcoin. Decisions are made by community consensus. Transparent. Every transaction is publicly recorded on the blockchain, and anyone can view it, though user identity is pseudonymous. Immutable. Once a transaction is added to the blockchain, it cannot be altered or deleted. Scarce. The limited supply of 21 million coins creates an anti-inflationary property similar to precious metals. Border agnostic. Bitcoin can be sent and received anywhere in the world without being limited by national borders or bank operating hours. The evolution of the cryptocurrency. Market following. Bitcoin's inception. Thousands of other cryptocurrencies, known as altcoins, have emerged. Each altcoin often has its own specific goal or technology. Some notable altcoins include Ethereum, ETH. More than just a currency, Ethereum is a blockchain platform that allows developers to build and deploy decentralized applications, dApps, and smart contracts. It's the foundation for many DeFi, decentralized finance, and NFT, non-fungible token projects. Ripple, XRP, focuses on providing fast and low-cost cross-border payment solutions for financial institutions. Litecoin, LTC, often referred to as digital silver to Bitcoin's digital gold, with faster block generation times and a larger supply. Cardano, ADA, Solana, SOL, Polkadot, DOT. New generation blockchain platforms focusing on scalability, security, and sustainability. The diversity of altcoins has created a vast cryptocurrency ecosystem, including decentralized finance, DeFi, financial applications built on the blockchain, offering services like lending, borrowing, trading, and insurance without intermediaries. NFTs, non-fungible tokens. Unique, non-interchangeable digital assets used to represent ownership of art, music, collectibles, and other virtual items. GameFi combines video games with decentralized finance, allowing players to own and earn from in-game assets. Metaverse, virtual worlds built on the blockchain, where users can interact, trade, and build assets. Factors influencing the cryptocurrency market. The cryptocurrency market is known for its high volatility, and the prices of Bitcoin and altcoins can fluctuate significantly in short periods. Some key factors influencing the market include government regulations. The stance of governments and financial regulatory bodies worldwide has a profound impact. Tighter regulations can pressure the market, while clear and friendly legal frameworks can boost adoption. For instance, a country recognizing Bitcoin as legal tender, like El Salvador, or completely banning cryptocurrency trading, like China, both have major impacts. Investor sentiment and market trends. The crypto market is heavily influenced by news, social media, and herd mentality. Positive news, with major institutions investing in Bitcoin new technology, can drive prices up, while negative news, e.g., exchange hacks, warnings from experts, can trigger sell-offs. The concepts of FOMO, fear of missing out, and FUD, fear, uncertainty, doubt, are very prevalent in this community. Technology and innovation. The development of new blockchain technologies, improving scalability, security, and efficiency can boost the adoption and value of crypto projects. Macroeconomic conditions, interest rates, inflation, central bank monetary policies, and global economic conditions can also affect the crypto market, especially as investors seek safe havens or inflation-resistant assets. Adoption and real-world use cases. The acceptance by businesses, organizations, and consumers in using cryptocurrencies as a means of payment or a store of value will be crucial for the market's long-term growth. Bitcoin halving events. As mentioned, halving events reduce the supply of new Bitcoin, often accompanied by significant price volatility in previous market cycles. Risks and challenges. Despite its immense potential, the cryptocurrency market also comes with significant risks and challenges. Extreme price volatility. This is the biggest risk. Cryptocurrency prices can surge or plummet by tens of % in a single day, leading to substantial losses for unwary investors. Security risks. While the blockchain itself is highly secure, exchanges, wallets, and related platforms can still be targets for cyber attacks. Users can also lose funds due to personal negligence, e.g., losing private keys. Lack of regulation. The absence of clear legal frameworks in many countries creates uncertainty and can lead to issues related to consumer protection, anti-money laundering, and taxation. Scams and fraud. The nascent crypto market is fertile ground for scam projects, rug pulls, Ponzi schemes, and other forms of fraud. Scalability. Despite advancements, some blockchains still face challenges in handling large volumes of transactions, leading to high fees and slow speeds during peak times. Environmental impact. Bitcoin mining consumes a significant amount of energy, raising concerns about its environmental footprint, although the industry is making efforts to transition to renewable energy sources. The future of cryptocurrency. The future of the cryptocurrency market remains a highly debated topic. However, clear trends indicate strong growth potential. Institutional adoption. More and more large financial institutions, investment funds, and technology corporations are integrating cryptocurrencies and blockchain into their operations, from offering trading services to developing enterprise blockchain solutions. Regulatory evolution. Governments worldwide are gradually forming clearer regulatory frameworks to govern the market, which could bring stability and confidence to mainstream investors. Continuous technological innovation. New generation blockchain technologies are being developed to address scalability, energy efficiency, and interoperability issues. Broader applications. Beyond financial purposes, blockchain technology is being explored for applications in supply chains, healthcare, identity management, and many other fields. The rise of CBDCs, central bank digital currencies. Central banks are researching and developing their own digital currencies, which could transform the global monetary system. In summary, the cryptocurrency market, with Bitcoin as its foundation, represents a paradigm shift in how we perceive finance and technology. While full of potential and opportunities, it also harbors significant risks. For anyone interested in participating in this market, thorough research, a clear understanding of the fundamentals, and an awareness of the risks are crucial. This is a continuously evolving field that promises to continue reshaping the economic and technological landscape for decades to come.